Good morning. It is Saturday, August 23rd, 2025. It's actually afternoon on the East Coast. It's morning on the West Coast where I am currently. Exciting week in markets, exciting finish to the week on Friday. I think a very important trading session on Friday, very important developments from the Federal Reserve, the Jackson Hole Symposium. And Powell did a PACO, I would say. I think the September rate cut was probably going to happen, period, prior to Friday. I don't think there's a big change in that expectation. I don't think we're going to get 50 in September. I think we'll get 25. But now the stage is set for potentially 3 rate cuts between now and the end of the year. I think 2 is a lock. After Friday, it's a lock. 3 is a possibility, a very distinct possibility. Maybe not a probability, but maybe more of like a 50-50 possibility at this point. But Powell very clearly pivoted to easing and capitulating on holding rates, the Fed funds at 4.5. Maybe the market is jumping the gun here a little bit, but probably not. This paragraph kind of says it all. While overall the labor market appears to be in balance, it is a curious kind of balance that results from a market slowing in both of the supply and demand for workers. Demand for workers is slowing. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. So he very clearly, in the very last sentence there, if the risks come to the forefront, they can do so quickly in the form of sharply higher layoffs and rising unemployment. So very clearly there, he's laying out the risk. Sharply higher layoffs and rising unemployment is now a very real risk, right? And it wasn't long ago, actually it was just in July, that the Fed is saying the upside risk is inflation. It's the greater of the two risks. In July, literally a month ago, less than a month ago, they said between the risk to the employment situation and inflation is the bigger risk. Okay, so in my mind, the non-farm payrolls report at the beginning of August, plus whatever else they're seeing since then, has shifted the risks towards the employment situation. Rising unemployment is the bigger risk than inflation, which is very interesting because if we look at the PPI data, here's the PPI from 2015 to 2025. You can see that it was rising up until the beginning of the year, and then it was in a downtrend for several months. And then in July, there was a big uptick in the PPI. The PPI came in way above consensus expectations in July. So he's laying out the pivot to easing and being more dovish at a time when the inflation data, both the CPI and the PPI, has just begun to turn up. Now, that could just be a 1-month aberration. It could have just been a glitch in the overall trend, or it could be something more substantial to worry about. But either way, the Fed is cutting rates. He basically committed to it in more words than one on Friday at Jackson Hole. And so what did the market do? Treasury yields fell and equities soared. The S&P up more than 1.5%. The Russell 2000 up almost 4%. So this is really the big story. They went to the small caps. They went to the lower market cap, higher risk, higher beta stuff. And this was clearly a breakout move in the Russell 2000 on Friday. This is the big story of the day. The move in treasury yields is a little bit curious because you would think that if the Fed is committing to cutting rates aggressively, that actually the long end yields might actually tick up, but no. The market read it as the risks to the economy, to GDP growth, to the employment situation are greater right now. And they bought the long end and yields fell. So clearly the market took Powell's speech as basically being growth is now a little bit challenged, but they bought equities because you always buy equities when the Fed does a dovish pivot, right? It'll be interesting to see how the 10-year yield trades next week, right? And if we see continuation follow through buying here in equities in the S&P and in the Russell 2000. But in my mind, as a technical analyst, this is a very powerful breakout in the IWM and one we don't really want to overthink or question. It is risk on here at the end of August, and there's no reason to really overthink it. But the fact that the PPI ticked up so much in July, and Powell is pivoting to easing, tells you that financial repression is on the way. And that's the game plan for the Fed quite clearly here. They're not as concerned about inflation, and they're pivoting to more aggressive easing here at the end of 2025 at a time when inflation is still well above their 2% target, right? And my Substack, by the way, advertisement, if you watch these videos, please subscribe to the Substack so you get all my content in real time as soon as I hit the send button. Look at this. This is from Macro Bond, great account on X. And look at what this is saying. Philly Fed future prices paid is telling us the PPI is going up. So this is not a 1 month aberration. This is actually a new trend. And the Fed is going to be pivoting to easing at a time when inflation is moving back up again, right? So that would call into question that 10-year yield drop on Friday, right? We'll have to see about that. But I went through it last week on my Substack, and I said that the stage is not set yet for a full Powell pivot, but the market outcome either way is gold positive. So maybe I didn't quite get, I didn't handicap Powell totally 100%, but I handicapped the market outcome. And that's all that matters to me anyway. I don't care about being right about Powell's words or his message exactly. I care more about what the market's going to do, right? And the market is going to buy gold, buy miners, buy silver, and buy copper, right? Hard assets. And so I got that right. And still, we don't have the full outcome here. I talked more about Putin and Zelensky and that whole peace deal, quote unquote, that's probably not happening. And that's also gold positive, right? So check out the Substack, subscribe. Gold. So this is the spot. So stock charts used to do the continuous futures contract. Now there's flipping to spot because the futures, the actively traded futures was 4 months out and the price was way above the spot price. So they pivoted back to spot price. The December contract closed at 34.17 on Friday. So still almost $50 above spot, but not as much as it was prior a couple weeks ago when Trump was talking Swiss import tariffs on Swiss gold. But anyway, the essence of the chart is the same. Yeah, the futures is a higher price. It looks a little bit different, but still it's in this multi-month consolidation. This is now, we're entering month 5 of this gold consolidation. This is a very bullish very healthy gold consolidation. It's helping to reset sentiment. It's helping to reset the chart. And if we go to the weekly chart, right, it looks a little bit different, right? This is a very strong uptrend on the weekly, beginning in September 2023 at 1,800 an ounce. And this is just another consolidation period, just like we had at the end of 2024, just like we had in the spring of 2024, just like we had at the beginning of 2024. Gold goes on these consolidations 2, 3, 4, sometimes 5 months. I would say this one is getting very close to a resolution, and I wrote as much on my Substack last couple of weeks. It may not be Monday or Tuesday, but probably in the next 2 to 3 weeks, gold is going to resolve this. It could be in early September when the next non-farm payrolls report comes out and it confirms that the Fed is behind the curve and prices in more rate cuts, more dovishness, more easing, more financial repression as the Fed cuts interest rates, as the labor market deteriorates, as growth comes off a bit more, but inflation stays sticky. Nirvana for hard assets, nirvana for precious metals, nirvana for mining stocks. So color me extremely bullish on hard assets, as I have been for a long time, but even more so. I want to, I've said a lot of articles I've written the past several months. I want to own more gold than ever before. I want to own more gold than ever before. I want to own more gold, silver, and copper than ever before. I want all of it. Give me the metals. Silver up big on Friday as well, up almost 2%. Higher beta, so gold up 1%, silver up 2%. That's a precious metals bull market. That's the kind of price action we want to see in a precious metals bull market. And I look a little bit at the technical indicators. We got a MACD bull cross here in silver on the daily. That's beautiful. We got a higher low put in place last week. And now we got the RSI turning up after a correction to near the median line, pointing higher. Boom, boom, boom. Bullish signal for silver. I love me some silver. Freeport McMoran. So remember, at the end of July, Trump tacoed on the copper, on the refined copper tariffs. The market was already kind of telling you, it was telling very clearly that Trump was probably going to taco on the copper tariffs. But we got that capitulation dump. FCX down 10% there in that single trading session. Copper down more than 20%. But copper found support around $4.40, $4.50 a pound. Just like FCX found support about $38, $39 per share. And now we're moving back up again. So let's talk copper here. UBS out with an excellent research report on copper last week. Let me synthesize it and refine it for you. Supply deficit in 2026. Copper supply deficit coming in 2026 because the supply response is just not there. The supply growth globally is just not there. Copper mining is really hard, really expensive. They've got to go deeper down into the earth. They've got to mine lower grade ore, and the supply response is just not there. So despite all the different negative things that you can make about copper, the demand continues to grind higher at a steady pace globally, and the supply response is just not there. So they see $5 per pound copper in 2026. That's not wildly bullish or anything, but that's an investment bank price target on a major commodity. So 10% roughly above where we're trading today, but it's higher. It's bullish, right? It's bullish, and the supply response there is just not there, right? Let's do a little chart review. Before we get into it, we're talking copper. I was been in Arizona for the past week. I went on a mining tour of Arizona. That'll be a separate video, separate Substack article over the coming days. I visited Prismo Metals near the Resolution project owned by Rio Tinto and BHP in the Arizona Copper Belt. That was literally The appeals court ruling came down the day I was visiting the resolution area there at Prismo Silver King project. That's going to be an interesting story. Really low market cap, really low price there on Prismo shares. Obviously, some things have not gone according to plan for the company in the last year or so, but this is going to be very interesting what happens at Silver King. So put that on your radar. Aztec Minerals, AZT on the TSX-V, they're drilling at Tombstone right now. They got 2 rigs. They got an RC rig, they got a diamond drill rig, and the diamond rig, or the core rig, is drilling a deeper hole targeting this MT anomaly at depth under the Tombstone gold and silver open pit, basically. CRD target, CRD. So CRD discovery in this location would be big news. So put that one on your radar. I visit Gunnison. They're ramping up mining activities there. They're going to be producing copper cathode by the end of the month. And the Cactus project, Cactus Mine, it was a mine. It's going to be a mine again, also in the Arizona Copper Belt across from Idaho Electric at their Santa Cruz porphyry deposit, right? So that's a preview, a lot to say about all that. So stay tuned for that. And be a premium subscriber so you get all my insights on all these companies and projects. And just to reaffirm, hard assets and equities are the hedge against the repression. What is financial repression? Well, it's the rate of inflation above the risk-free rate, right? So the rate that you can earn on your bank savings account, certainly on your checking account, even on your money market fund, right? The inflation rate, the cost of living, the cost for you to exist is higher than the interest that you can yield on those different low risk savings accounts, right? That's repression, right? And so it's here and it's only going to get worse. Yay. But on the bright side, there's opportunities. There's ways you can invest and save yourself, hedge yourself from the financial repression. Hard assets, gold, silver, and equities and mining stocks. So let's go through some examples of ways that we can do better financially, right? So Barrick mining. This is also, check back on my Substack, Goldfinger Capital. I wrote about Barrick earlier in the year. Was it April? Was it May? Around that time frame, I said, buy the stock. I'm bullish on it. Well, that was the right call. Look at Barrick breaking out. Look at the volume here, right? So this is very clearly an uptrend, a very bullish chart. And this is a company and a stock that was widely hated just 3 months ago. Literally just 3 months ago. One of the most hated stocks in the entire US stock market, Canadian stock market. Barrick was hated. Remember this? $17 a share in May, right? So the fact that this is now such a powerful uptrend with volume buying pressure pouring in here in August, very bullish setup for Barrick. I don't think this move is done yet, not by a long shot. Newmont, weekly chart. Look at this one. Yeah, at the end of 2024, Newmont was one of the most hated stocks in the entire market. Well, it's almost a double. This is now a $77 billion US dollar market cap for the biggest gold miner in the world, Newmont. What a beauty. I don't think this move is done yet. Moving down the food chain, this is Artemis Gold, right? So they are literally just now officially a mining company. Commercial production has been declared at Blackwater, which is the Artemis Gold mine in British Columbia, Canada. And I show this not because I have an opinion on Artemis shares at $28.35 a share on the TSX-V. They're still in the V. They're probably going to go up to the TSX now that they declared commercial production at Blackwater. But this is an example of the virtuous cycle of a rising gold price and a company that meets key milestones on the construction and ramp up of a mine, right? This is why mining stocks can do very well. This is why we should pay attention to the mining sector, because when it works and when we pick stocks well and management teams fulfill their promises on time, this is the virtuous cycle. This is a 500% gain in, 2 years, right? So 500% return in 2 years, that's good enough for me to be interested in a very speculative sector, right? And that's why the mining sector, the junior mining sector, is of interest, because there's not many sectors of the stock market that can generate 500% gains over 24 months, right? Collective mining. So big new discovery story in Colombia, right? Really sprang onto the scene in 2023, 2024, and then went to a whole new level early in 2025. It's been in a consolidation period for the last 4 months, but that's what a discovery story does. You can't expect the company to put out incredible drill results all the time and new discoveries all the time. It takes time. There needs to be a resting period. Collective mining, CNL, on the Amex or the TSX is in a resting period, but watch out. I don't think this one is done yet. Banyan Gold, what a beauty the last 2 months. Yukon Gold Explorer that I have followed for a long time, literally like 8 years, 7-8 years. Tara Christie, the CEO, one of the best in the business. And what has caused this move in Banyan? Gold has basically been flat since June. We saw the chart earlier. It's gone sideways. Why has Banyan doubled since June, right? Well, new resource update focused on higher grade zones at Powerline and Airstrip, the two deposits that really make up the core of the Ormac project there in the Yukon, but also the market perception, the investor perception of the Yukon as a gold mining jurisdiction, and this particularly this Mayo mining area of the Yukon, investor perception has become much more favorable. And there's rumors, there's talk, including some publicly available stuff you can find for yourself, that the Eagle mine, the one that had the heap leach pad failure in June 2024, is going to be transacted. So the sale process is going to go through, and a large mining company is going to take ownership of that, and that will benefit Banyan. Maybe even that large mining company would be interested in Banyan's assets, right? So the market doing what it does, speculating on some sort of favorable outcome here for Banyan. And we're at a new 52-week high, new multi-year high in BYN shares. Sitka Gold, another Yukon Gold Explorer in the same gold belt, the Tombstone Gold Belt. And this one, as much as I want to take profits, and I have taken some profits here, the company just keeps delivering. And when a company is able to do that and continuing at a very high hit rate with excellent gold intercepts over wide intervals, I can't not own it, right? So Sitka is a beauty, continues to perform well, continues to outperform, quite frankly. And Rackla, so I don't own Rackla, but I want to tell Rackla shareholders and investors and management that it's firmly on my radar now. So I've had enough people trying to convince me that this one is the real deal and potentially another snowline, that it is on my radar. So you have my attention, Rackla Metals. Let's see what you do with it. I want to see the first drill results, and maybe I'll make a call on it. And so that's it. The final one, Hercules Metals. I just want to say Hercules, sometimes the technicals and the fundamentals start to align, and those are the best trade setups for me. So I'm long Hercules. Obviously, those who follow me know I'm a big bull in Hercules. We'd had the financing. The company needed to get some more money in the treasury to mitigate risk, basically financing risk, and to be able to give clarity and visibility that they'll be able to continue with 5 drill rigs for the rest of 2025 drill season, right? So they got that out of the way, obviously kill the momentum there at the end of July, but now the financing is closed. That's all done. 20 million Canadian in the treasury. And now the stock is gathering itself again, about to get a MACD bull cross, just like that silver daily chart. RSI waffling around the median line, but maybe about to resolve higher. And then can price punch through the resistance around 78, 79 cents? We will see, but we know a lot of news is coming here in the final 4 months and 1 week of 2025. And this is a premium post. It's a paid post on my Substack. I'm previewing the part that I made public, but another reason to subscribe and be a paid reader of Goldfinger Capitals. You get all that stuff. So I kind of lay it all out there. Not a super deep dive, but really clear and to the point in the catalyst, in terms of the catalyst for the Idaho Copper Belt for the rest of 2025. So we'll see how this chart resolves and the news flow, which will obviously include a lot of drill results out of Idaho for the rest of 2025. And that's it this week for the weekly video. If you enjoyed this content, if you like the stuff I put out there, please hit the like button, subscribe, and feel free to share it freely and widely. And have a peaceful weekend and a powerful final trading week of August. Thank you.